It is September, and with it some seasonal winds of change for Manhattan real estate market. August was slower as expected, and so was the first half of September, a relatively quiet time in New York City real estate market. What's ahead? Here is your market report for August.
Welcome to New York. It's been waiting for you. Welcome to New York. Welcome to New York.
Supply continues to drop this August to the low 6,000, a 3.5% or so drop both from last month and last year. 787 new listings came to the market in August, and 19.5% decline from previous month. This decrease in available inventory has also affected activity, with monthly contract activity falling by 7% from July. We do expect and already see supply rising this month as sellers return from their summers away and a new listing wave hits the market. The number of signed contracts is also expected to rise by October, with more business being done over the busier fall season. Pending sales are up by close to 60% year to date and by 6% from last month to 2,775. Urban Digs launched a new metric called Liquid Pace that uses liquidity as a more up-to-date measure. When we look at it now, the market pulse remains in the middle with no significant rise, indicating a more neutral market these days. Median and average price in the city went up. With fewer listings on the market, prices remain high, with the median sales price hovering close to $1.2 million and more than 20% increase in the monthly number of sales closing above the asking price. The median discounts also remained at 4% with no change from last month. Sellers are locked into their low interest rate, contributing further to the pressure on inventory and driving the prices up. Supply is not keeping up with demand. When we look at the pace of liquidity, a 30-day moving window of signed contract, we also see a decline in demand, and this is expected to last for the next 3 weeks or so. Manhattan rental market may be starting to even out. The median rent dropped slightly from last month and is now at $4,303, a 4.2% decrease. So what's awaiting in this market? I predict a rise in available inventory, more activity in the market, and more contracts signed towards October and November. Rents will remain high, but will most likely not go higher than what they are now, and sale prices will not drop by much as long as sellers continue to hold on to their low rates and refuse to go on the market. Negotiability as a result will remain limited. Sellers listing their units will see more activity, and the time to transact is now.